definition because all of the topics, all of the concepts that we have been talking about, this is the best time you can really apply them to your trading to improve more and also have confidence whenever you're taking trades. To not just guess trade whenever you are making any trading decision. So you trade based off of what you are seeing or based off of your analysis realistically. You can, like we've always told you, we say your boat doesn't just trade for you. RoyalQ doesn't just trade for you, right? It's trade based off of instructions, right? Set of instructions that you give to the trade. So you should best know that if you have a car, right, you would only get to a destination if you are the one actually maneuvering that car and driving on the road. You are able to drive the car based of how an excellent driver would drive the car so as to get you to a destination safely and also to say, okay, yeah, this is the time approximately I want to get to my destination. So you know on what speed you are going and all of it. So yeah, it also applies to trading. So when you are trading, you don't just trade based off of idea of just saying by guessing. So you don't just trade by guessing. You trade based off confluences. You trade based off of the condition of the market, the how the market is moving. You don't just trade based off guessing. So you want to follow the trend absolutely because there's a saying that says the trend is your friend. So you don't want to trade against the trend. So knowing and you know that in trading, right? In RoyalQ on its own, we have the spot market and then we have the futures market. So in most of the time when you are trading the spot market, if you are not really like kind of the investor type, the only direction you can really coast towards the spot market is when it's upside, open. So by just holding that asset to make sure you are selling when the market is going high, it's going bullish. But then when it comes to the futures market, which you have the opportunity to trade RoyalQ trader, also the robotic trader, you can trade in both direction, either direction. So the market might either be going bullish or it's going bearish, but you have opportunity in both directions. So which makes it more interesting. So when you know how to put all these concepts together by analyzing the market, properly doing your analysis, and as a good trader also, you don't just do technical analysis, you also do your fundamental analysis by knowing what your news is saying, what the economic calendars are saying. So applying all of these things, you tend to make better decisions in the market, right? So without any further ado, we'll go with the topic of tonight, which is applying SMC um, to RoyalQ trading. What's SMC? Probably we even have a newcomer here within us. I think it's a concept that you all would have been hearing all this while, right? So SMC is basically a short form of saying smart money. So what is smart money? It's a concept, okay? It's a trading strategy. We have different type of strategy in the market. We have ICC, we have just normal we have different type of strategy in the market, right? We have people who trade support and resistance, trading patterns and all of it. So for we particularly in our team, we teach you how to trade SMC because we know that it's a strategy, it's a winning strategy, and it's very good. Up to now, we've talked about how you can draw a structure. Just know whichever strategy you're trading in the market, the first thing any trader will teach you about is market structure. So when you say market structure, what do you mean by market structure? So knowing the movements of markets, so knowing the trend of the market. If a market is an uptrend, it's knowing the condition in general. I will use the word condition. So knowing the condition of a market is when you see if market is in an uptrend, the market is bullish. If it's in a downtrend, right, it's bearish. If the market is in a sideways market, that's where we say market is consolidating, right? So the market is consolidating, and that's when we see market structure. So market structure basically is when we have in an uptrend scenario, in an uptrend market, I just basically listed them for you right now. I said three types of market condition you would see is the uptrend, downtrend, and sideways markets, which is the consolidating market. So in an uptrend, what is a market structure? So market structure is when markets creating higher highs and creating higher lows, right? And then breaking the recent high to create new highs, okay, in an uptrend direction. In a downtrend scenario, instead in a downtrend market, right? Market tends to break recent high to create new recent lows, okay? So creating swing lows and breaking structure to the downside. So continuing to break structure to the downside. But in a consolidating market instead, we have when markets create equal heights, right? It goes ups and it goes down. So it's creating a support and resistance, but then the highs and the lows are equal. They are not higher than each other. And then we've talked about also our BOS, which is our break of structure. So basically, what I just referred to was just now when I was talking about the market structure, which is market breaking a certain high to create a new high. So in this scenario, um, we have market actually breaking that structure, right? And then for a structure to break, it means there are still certain orders, right? The institutional orders that are left behind. So BOS is when market break structures, break new highs, right? And then the other concept is our OB, right? This is our order block, where these are all concepts in which we've talked about in most of our previous classes. If you are here and you don't know about any of these things that I'm making mention of, you can go straight to our YouTube channel where you can watch this previous video, even though we are still going to come back to it whenever we complete our curriculum. I'm just trying to review, like to do a quick summary about what we've talked about up till now before we can dive into today's topic. So just to refresh our brain. Um, so the last concept will be the OB, and the OB is order block, right? Short form for order block. And what do we call an order block? An order block is institution orders, order flow, right? Those are big orders, limit orders, as the case might be. So when we say order, I should quickly break it down to a simple English. So when you place an order online, right? Probably on eBay, Amazon, what other platform do we have that we can buy things online? Most of those platforms where you buy things online, right? So you buy something, uh, and they then ship it to your address, right? So you place an order, right? So by the time they deliver that stuff to you, that's when you actually received what you bought. So it's the same thing here. So whenever you are interacting with our RoyalQ robot, right? When we place a limit order, is whenever you place that your order, we taught you some of the strategy when you can use your MACD to place order, and then that order, whenever it's not placed yet, you will still see that your P&L, your profit and loss ratio will be on stagnant, because why? that order you placed hasn't filled yet, right? The board hasn't bought any of the orders, right, that you placed. So that's a limit order. And then so referring back to our order block, so now we're talking about institutional order, right? So the big banks, the big guys in the market, ways in the market, right? They place this type of orders, right, that can really move price. So those price at times serves as like manipulations in the market, right? So don't let's divert from what we are talking right now. Just for you to get clearly what we are saying, another block is huge order, huge institutional orders at the institution place that has to be filled, right? So that's another block. So the next concept we talk about, which is also the next concept you always know about that we taught you here, is about the confluences. So whenever you are able to outline you define. So this is the step, right? We first define what's the structure of the market, right? So we know, okay, what's the trend of the market? So by following a top-down analysis process, thought process, right? You go to your higher time frame, either 4 hours or 1 hour on your chart, and then you do your analysis from the higher time frame to the lower time frame, right? And you have your time frame for your entry, which is the lowest time frame, which can be either 30 minutes or 15 minutes, as the case might be, right? So you use your 4 hours to identify the trend, and then you do your analysis on your 1 hour, and then your 30 minutes will be your entry or your 15 minutes, right? So then after defining the trend of the market, now is to then define the structures, right? Then you do the definition of your structure by outlining the higher highs and marking all of this out uh, by identifying the recent breaks of structures, the BOS, and then spotting your OBs. We taught you how you can really identify your OB, the thought process, how you can do all of this. If you are missing anything out, you can always refer to our previous videos, right? You place your OB, you got it. Now is to look for the confluences, and one of the confluences you have to look for is the liquidity, right? That market will later come to grab. And then other confluences that you have to also look for is your FVG. Your FVG is your fair value gap. Those uh, are imbalance in market, right? In the market structure, those are imbalance that prices create when there is market manipulation, when institutions try to manipulate price. No, actually, I'm not sharing my screen yet. I'm just going through. Well, let's share my screen. So this is this trade should play out very soon. Okay. So can you guys see my screen? Let's see if I get this. Okay, I think I do. Okay. So this is the topic of the day. Let me see. Can you guys see my? If you can see my screen, just type one in the chat box. Okay. Perfect. I didn't know who said didn't see if I was sharing my screen. Okay, so I wasn't sharing my screen. I was just analyzing, elaborating on our previous topic to refresh our mind about what we've done up to now, to then dive into the topic of the day, right? So as you can see, the topic for today is applying SMC strategy to RoyalQ trading, how to identify institutional order blocks, right? So like I was saying before I was sharing my screen. So all these things are things in which we have to like get. So like The other block is the next thing that you have to check, which is the limit order that I make reference to. So these are like big institutional orders that are left that are on field. And then when these orders are then filled, we call these areas now. Whenever another block is filled, it's called, it's not really necessary, but it's good that you know it. It's called an order that has been mitigated. That's why I say you should always take notes. So as technical analysts, right, in the chat, whenever we are chatting, right, for example, let me show you something. So for example, I might be chatting right here, right? And I have another block right here, for example. So I can see that for this structure to have played out, right? I pick my path 2 from here. You see, if I follow this structure all the way from here, created this high, and then we had this low, and then we had this high again, right? For example, we don't just draw these things just to draw them for drawing sake, right? We follow order flow, right? Market order flow, okay, institutional order flow, to be able to identify whenever order blocks are being filled. So if I place an order, I'm expecting it to fill, right? For the order to file, so that I can buy into the market, then sell at the price I want to sell at, or my target price, right? So there is something when another block is being mitigated, right? This is what happens. If I say this is my order block right here. So if this realistically was my order block, right? This was a nice order block, for example. But look at what happened, right? After market bought into this order block, right? So this order block, this order block here, after market bought into it, you see what price did, right? It started to buy upside from here, started to do all the way upside, right? This order block now is no longer valid, right? But you won't say it's no longer valid, but you would say another block that is being mitigated, right? So this other block now has been mitigated. So if I was to be doing my analysis now, I know now that for this other block to be mitigated, I have to look for another order block within this range. So I have to analyze this leg now. So this leg, for example, there is this leg, right? I know that market has did impulsive move to the upside, pull back leg, then came back to the other block, pick the order around here, pick the order. So market pulled back into this other block and then went back up. And it's still going to do the same thing because why? I know that the market is going in an uptrend direction, right? So now, this is an impulsive move to the upside. Now I should be expecting market to do what? To go back to this other block here, where I'm currently having I send this signal into the group, right? And this is the thought process behind doing analysis, right? So now, and why would I say this is a valid order block? Because there has been break of structure, right? Look at, there has been break of structure. These are equal highs, right? But then it's really perfect. It's really matters if whenever you are doing analysis, you have to actually mark out the precise places where market broke structures. So we have this structure above here. You'll be looking at, okay, this structure didn't really break out really well, but if I go to the 5 minutes time frame, you will see that there was a little break. There's 1-2 candle outside of this area. And then when market broke this structure, it pulled back before it created a new structure upside. Right? That's why I didn't really mark it outside, but just for you to see the thought process around, right? So now, The example I'm just giving you is that whenever another block is being whenever price come back to our order block and then create new order block, new highs, right? That recent order block that market broke, now it's now an order block that we call that it's being mitigated order block, mitigated. It's been mitigated, okay? So and this would be a DOS, or nonetheless, all right? So let's come back to this. So another block is the last bullish or bearish candle before a strong price move caused by institutional activity. This is what I really want you to like put your focus on. So when I say big orders, right? So you place orders in the market every day. So you buy and you sell. Those are limit order that you are placing or market order. So what's the difference between limit order? Limit order is a price in which you are buying, where price hasn't actually come to. So where market hasn't, people hasn't, and the buyers and sellers haven't actually agreed to sell at, but you are believing that it's a fair price that you are paying for. Okay, so like you want to buy something, but you are bidding for that price. Okay, so that's the limit order. Market order is the order where you say, okay, you are going to buy at a market price, like the price, the actual price in the market. Okay, so now how to spot another block. So how do you spot another block? For you to spot another block, look for a big impulsive move after a candle, right? Bullish or bearish. Look for a big impulsive move after a candle, right? So I actually I gave us in our last class or the previous one, how to spot another block, right? I said you can spot it when you are able to spot your institutional candle, and we talked about and we made emphasis on three Marabusu candles to make it simple. Do anybody remember when we talked about our Marabusu candle? And can anybody tell me what a Marabusu candle looks like in the chat box, please? Can anybody tell me what a Marabusu candle looks like in the chat box? Please, if you know, you can just raise up your hand. You can type in the chat box, or you can just unmute and tell us, please, if you know. If not, no problem. I'll just there won't be a problem, but I would recommend that you go back to most of our previous classes to go watch that video. So, do anybody know how to spot a Marabusu candle? I'm looking at our chat to see if anybody knows the Marabusu candle. Nobody? All right, no problem. So just go back to those previous videos, watch them. It's very important because you see we want to apply them in those classes. We just move on. I'm trying to be time conscious this evening. So the candle before that strong move is the other block. So the candle before that other block, before so for you to spot your other block, right? You have to spot your institutional candle. And most of your institutional candle will come. So when price sparks upside, right? Price normally do something, and it does that and leaves like a whole gap in your chart. So leaving like imbalance situation in your chart. So I told you about how to spot your institutional candle, that you will normally see your three Marabusu candle forming, right? And in between it forming like a gap. Right, so let me just show us something here real quick from the chart. So so look at This would be a downward scenario, but it's a Marabosu candle. This is a Marabosu candle here. This is a Marabosu candle. And if I should count, right? I said 3 Marabosu candle, right? So if I was to sell this market, and we can see that this market actually sold, right? So this would be my order block. Yeah. This would be my order block. And between the first and the third candle, yeah, would have the first buy candle that before market spike was this. And we have our imbalance here around here in a sell condition. Yeah, I should actually come to hourly time frame. And you can see here right here. So we have a clearer fair value gap here. In fact, I marked this out. So, but this is in a bullish scenario. You can see clearly from here. If you look, this is a bullish structure. So, but this is your fair value gap here for SVG. So, from the body of the first and a third candle, this could be an imbalance or a fair value gap. A larger space between the first and the third candle is it's an imbalance, and a smaller space will be a fair value gap. So what am I actually talking about? What I'm talking about is that whenever you want to spot your order block, right, you would always spot your order block. The order block will be the last bearish candle, right, that price created before the spike to the upside, right? So this is the last bearish candle before price spiked, right? And we have these 3 Marabosu candle here. This is the largest one. And then within this 3, 1, 2, 3, the space market creates. So creating an imbalance in price, okay? So creating like a gap in price. So if you look at these other candles right now, you see that most of these candles don't really have that much space between them, right? But then here, this price just spiked, and then just one candlestick covers almost if you add up all these candles now, it's not even big enough to dish just one candle. And this is what we call imbalance in the market. So when something is imbalanced, right? When something is not balanced, okay? So when price is moving, but then there's a spike in price. So when you see price going really volatile, right? So when you see any coin, we are trading crypto and the market is very volatile. So then you then see all of a sudden price spiking, doing 20%, 30%. There is price manipulation. For you to spot this, you want to know, okay, does the institution has it run the market? So how do you spot that? It's when you are able to spot your imbalance. For you to spot your imbalance, you want to spot your institutional candle. And this is how you spot them. By spotting your fair value gap and your imbalance. Okay. And this is how you spot them. You spot your Marabusu. So whenever price spikes, you go and you check, and your order block now will be left at the last bearish candle price created before an up move. So in a bearish scenario, the last buy candle before price spikes to the downside. Is there any question? Do you have any question? Okay, we don't have question as regards to this. And you can see what the price did, it came back to this other block. Look at this price of this trade here. I took this trade and it was up to, like, I think I had let's see how much I did here. So I took this trade and it was around I came out around here. So it was 1:3 or so. You see, I actually made up to like 86 points here, and that's around 3.9%. Okay. So this trade, actually, this other trade that I took, market was really consolidating so bad. I had to leave this trade. I left the trade, and I took my money out of it. So I have this new setup that I'm looking forward to right now. So now, let's go back to our slide. I have little time, but let's go back to our slide. So now, the candle before that strong move, which is the last selling candle in an uptrend direction, is the order block, right? This is textbook definition. And not everybody that will tell you how to spot institutional candle, right? Because there are certain ways in which you spot institutional candles, and I'm going to give you all those tricks, right? Just always show up in class. There are most things in which doesn't apply at times to what you will see in the textbooks or slides or ebooks. Most every trader has their own strategy and ways they are able to like spot big moves in the market and stuff like that. But just keep showing up. It might just be that day that you will be like feeling low on to showing up in class. You have that pro tip, you know. I don't get keep most of the time. I share the free knowledge with everybody and stuff like that. So, but then the only thing I just ask is always show up in classes. I mean, you might have something new to always take home, but don't always forget to always take note. Okay. So price of phone return to these zones before continuing the trend. Imagine, so price always come to these zones, and from our charts we saw that. Right, from our chart we saw that. So this is so what did price do? You can see it mitigated here. Right? What did it do here also? This block here also, it mitigated. What did price do? Let's analyze what price did here. Okay. So we say that this is an uptrend. We already defined it from our 4 hours time frame that this was an uptrend, right? And as you can see, I should pick my trend line. I mark from here all the way. You can see it's an uptrend. Why do we say it's an uptrend? Because I drew this trend line, right below this trend, right? But then it didn't break. Okay. So if I should extend even this trend line, we can see that lately, Bitcoin is actually moving bearish. Why? Why is Bitcoin moving bearish from the recent price they did? So look, let me finish drawing this trend line, and I will show you something. So if I should draw my trend line just like this, well, let me draw it from this recent low. Sorry. So if I should pick my trend line right now, and I draw from here, and I extend it, look at all to this place. Look at Bitcoin has been trending in this direction for a while, but then at this area, it came here, it tested it, it didn't break, but then here, it broke the structure, it broke this trend line, and now in a higher perspective, in a higher time frame, Bitcoin is currently in a downtrend. Bitcoin is currently in a downtrend, and then It has been creating, in fact, you can see on my higher time frame, I actually know that the trend is in a downtrend, and I have blocks that are not yet mitigated here. Look at, I have this because it's creating lower highs, okay, in an uptrend direction. But then there's also one concept, right, in trading. In a higher time frame, trade might be in a bullish direction, but then when you come to your lower time frame, right, you can have an uptrend bias, okay? Because why is this? That okay, overall trend is bullish, is bearish, sorry, but then in a lower time frame you are trading bullish because there is this thing in the market, right? So your previous support can now be your new resistance at times, and your resistance at times can be your support. Before market is going to sell, it has to buy, and before market has to buy, it has to sell. If you understand what I just said, please type 1 in the chat box. If you don't, type 2. Let me see something. So please, if you understood what I just said, type 1. If you understand the concept that I just explained, type 1. If you don't, type 2. Okay, we have some people who typed 2. Okay, we have also like 2 people who typed 1. No, 3 people actually. So let's look it um from this. For example, these are okay. Let's come back to us here. 1 hour. So now look at this market is in an uptrend direction, right? But we all agree that when there's price doesn't move in a straight line, so there's always an impulsive move to the upside and a pullback leg to the downside, right? So now, what did price do here? If you see, you agree with me that price is not even moving in a straightforward direction here. It's not just going up, 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 okay? It's going to buy. It's going to buy, right? Buy means price will go bullish. And then at a point, it will retrace because why? People bought at this area, right? People bought at this area very cheap. And then they agreed to sell at this area. And some people were buying. For some people that just came in, it was cheap for them. So they were buying, right? So they will buy now, and some people will be selling, right? And when they are selling, so now you agree with me that market has to buy before it can sell. And then it has to sell for it to buy. So if I'm having a product, and you are willing to sell, right? You are buying either for you to consume or you are buying for you to resell. So now let's agree that you want to make profit on that product, right? You might buy from me for 100 naira, and then you also want to make your profit, but you are selling for 150, which means you have to buy before you can sell. You cannot sell what you don't have. You understand? And you can buy what is not available. So it's supply and demand. So do everybody understand now? Am I able to like break this concept down clearly? If you understand now, type 1. If you don't still understand, just type 2. So
leader, please can I come in?
yeah.
If they are, is it the same person? Is it the same people that is buying from this damn position? When they are buying, the price is going up. If you are buying at a low position, okay, when the price now high, you now start selling. Is it the same people selling at that high price?
No, because let
Those
me
people that bought at a low position, they are the ones selling at the high price for the price to now start coming down.
they can be the same people. They can also not be the same people. So let me give you an example. So now imagine that these people split their price, their orders, right? They split their orders. They are buying at the if this buyer A, right, bought here, for example, right? We aim to make a targeted profit, right? So now this person now bought here, right, at a different time in the market. And then there are people who are buying at this area here, top here, right? He is now selling. He wants to buy back again now. He has to wait now for price to dip before it can sell. But if he doesn't sell and keeps to hold it, right, it will sell at an even lower price, which means he continues to sell all the way to the point in which maybe he's no longer making profit, right? It can be the same person. So now, imagine another trader now bought at this range. You are not expecting him to sell at this trend. But then if he continues to hold, since it's a contract now, we are in the futures market, if he doesn't sell and price gets to its entry price, it might get liquidated. It's a contract. I don't know if you get my point.
Yes, yes, yes. Go ahead.
So it's the market playbook, right? So it depends on where you get in. Some people got in here, some people got in earlier, some people get in late. So now the profit that is good for you might not be good for another person because we all have different entry prices. So there are orders here. People bought from this other block with the aim to sell at this high. So because they are good with this now. When they sell now, they have other orders like placed. As soon as they sell, they place orders below again. So as people will then, sell again. Because the people who are actually selling here, probably they got in earlier. You understand? So this is how it goes. It's a law of supply and demand, and people cannot really buy what they don't really have. Like they can't buy what's not available. So it's a question of if there's supply in the market. So we have supply zones and distribution in the market. It's order flow. So now price often return to these zones to continue the trend. Usually formed near key support and resistance or liquidity zones. So if we say liquidity zones, most of the analysis I drop at times, right? I always draw out my liquidity zones. And what will be my liquidity zones? And how do we define your liquidity? Look at here. You will see I always put it out with like a dollar sign in my trade. This is liquidity, right? They are swing lows. At times they are often in your swing lows. You can see I mark out liquidity upside and I mark out liquidity downside. What's liquidity? So liquidity is when they're like place zones in which prices fail to don't want to react to, right? So when there's a push to the upside, right, price pull back, and then this zone here is kind of a zone in which buyers and sellers are not really agreeing, and price is not agreeing to go back to the other block, and it continues to push. But then we know that price was trying its best to come take orders here, but left liquidities here, left orders on field, right? And then price will eventually come and take out this piece. And then this is even giving us more assurance that price is going to take out this liquidity and this price is not going to hold here, right? The best place to place your order is your order block. And then liquidity will always be your pullback area close to your order block. And this is liquidity here. And we also have liquidity here because price buyers and sellers are really not agreeing on that price at that area. The best price where they feel like it's the fair price for that asset at the moment is the order block. Okay. So liquidity it's like a pullback area in which prices is not really strong. You will see like at times pin back candles, at times your what's it called? The candle without the body. Sorry, this is escaping me, but we can go back to our slide.
Doji, doji, how do they call it? Doji.
Doji, yeah. So whenever you are seeing doji appearing in your chart, you know that there is indecision in the market. So it's gonna be like a reversal at times. So when there's always reversal in the can, so let's look at neutral candle, right? You can see they are neutral. Now when you spot doji in the market, you know that, or dragonflies and all of it, it's all doji. But then depending on what you see and how you see it and the places where you see them, you know you should be spotting a reversal. So price is weak at that area. It's either the buyers are exhausted or the sellers are exhausted. And then there will always be a reversal. And you can see from this chart here, right? When the buyers, when they get exhausted, price, it formed a swing low. And this is a really swing low. You can see when there's this doji, what does price did? Sellers are, buyers are weaker now because there is no longer buyers in the market again. Now price is retracing back to this other block here. And you can see there's a reversal. So here, we won't really say this is like a doji, but it's almost, right? This is like more of how let's see what it is. So if you have this candle with weaker body, it's like an hammer, but it's not actually a hammer. We would say it's a doji. Okay, it's a doji. So we can call it a hammer. And whenever we see a hammer, what do we see price is? It's a reversal candle. So price just reverse a little bit, but then it still continues to go bullish. Okay. So it was just like a pullback, and it formed this beautiful liquidity here for us to even have more confirmation. This is like a confluence for us, SMC traders, to know that this other block is really valid. Price is still going to come back to it. So this is like why you still see this candlestick green is because within this area here, right? We are in a 1 hour time frame. The other block for the hourly time frame would be here. But then I don't have a fair value gap. So I had to go back down to my entry time frame to spot my other block. And you can see, because this other block here has been mitigated from this block, right? But then within this block, actually, if I go down to the 15 minutes time frame, I can see that, price actually formed another other block here, from another break of structure. But then I still have this this beautiful other block that hasn't been mitigated yet. So what did I do? So here today, I'll be showing us a new thing, right? So now there is a tool in the market that we can use to spot reversals in the market, right? So pay attention here, pay attention and take note, right? This is not in our slide, but I use this a lot, and most of the traders use this a lot, okay? So now this is what we call a Fibonacci retracement. This is a Fibonacci retracement, and I'm about to show us how to use this. And we really have like 1 minute left. We'll still have more time to talk about this. So I know perfectly that price is still going to trace back to this other block by just plotting my Fibonacci retracement. So this is my Fibonacci retracement to actually spot retracement in the market, and I would probably dedicate a class to this Fibonacci to teach us how Fibonacci works. But you can go ahead and watch videos online, YouTube or stuff, and we'll see them and talk about this to just do your own research. So you mark out your swing low, you pick your Fibonacci from the swing low, and you swing it up to your swing high, and you leave it like this. So this 0.5 Fibonacci that you see that's in yellow here, here is where we call the golden ratio. Okay, this is where we call the golden ratio, and this is a premium zone. You can also refer to it as a premium zone. So I'm looking at price here above this Fibonacci 0.5 here. Anything price does around this place, I know it's premium. It's too costly for me. Okay. where I'm expecting price to come now is my 0.6, which is my discounted zone. Okay. And if you can see right clearly, right, we have our fair value gap above this place. I did all that analysis here on the 30 minutes time frame. Right? There's not really that much of a fair value gap. There's this fair value gap that form above the premium zone around here. But then since I'm really tightly on this other block, I just want to spot out my institutional candle. So the best way I could do that was to draw my Fibonacci and to make sure that my institutional candle fall between my 0.6 zone, which is a discounted zone area. And this other block fall into my zone perfectly. And this is a discounted zone for me. And I know that price is going to retrace back to this zone. And if it should retrace to it, once price tapped here, it's going to continue to trend. But if anything that make price to go below this, I know that there's a change of character, because why? This other block would have been broken down from here. Whenever prices break our BOS downward, we have a choke, which we talked about, which is our change of character. So we know that price might reverse the trend. Okay. So if there's any question, please ask before we move on. Before we call it a day, sorry. So is there a question? Is there any question? If you have,
I have a question. You know, this other block, you drew it in a rectangle form. Does it mean that the top line is where the coin will drop to? Is there no possibility that the coin can still drop and reach the middle, since is inside that box?
the reason why I dropped this other block beneath here is because we have internal structure, and then the internal structure already took out this other block here. Right. So you see that this was the structure. This was the other block that we had earlier, which I drew, as I said, is mitigated. The 15-minute order block that is here, right? It has been mitigated. You agree with me that price did this, right? Created this high, and it pulled back, didn't come to the other block confirmly. So leaving like liquidity here. So it did this and broke, created new high, right? Breaking the structure, and then did this, and it finally came to the other block and mitigated it, right? So then it broke this other block now. This now got broken and created this, right? Breaking this structure, and did this, and we had this. Right now we are currently here. Okay, we have this structure, and this here now we want to now identify our other block here. So now the reason why I did what I did is because why? If you look closely here, so if I was to redefine this structure, now I want to look for my valid order block, right, between here. Now I have to define to see if this other block here, right, is still valid. This would have been my, when price move, if I go 5 minutes, right? So I go 5 minutes, so you can see clearly what we are doing. So now this would have been my order block. This should have been my order block here. So if I was on my 30 minutes, you won't see it clearly because you won't see it clearly if I'm in higher time frame, like 30 minutes, okay? Because this would have been my order block. So let me cancel this so you can see. This would have been my order block. So we said once you draw your structure and you draw your BOS, right? So market has created this high and broke it with this. Right? There's an impulsive move to the upside, pullback leg, and the market came back and it broke this high, right? Agreed. Now it's for you to fix your other block. Now, this other block here, now, if you check, if I should pick my right angle tool now, and I pick from here, right? When I draw it, you can see that this price here has already tapped into it. It has been mitigated. Why is it mitigated? Because price already tapped in it. And it's moved further up. So now I need to look for another order block. So you can see it clearly when you come to 5 minutes, for example. So you only see it clearly when you come to 5 minutes because why? See here now. So if I was to analyze the 5 minutes time frame, so there has to be a gap before we can say, okay, so look at now. This would have been the 5 minutes order block, right? But the last candle before price moved really this would have been it. But price already came in it. You see, it was even going and we had a normal fair value. We can see we had a fair value gap, 5 minutes, five fair value gap here, right? This is the first and this is the third candle. It's a 15-minute one actually. So you can see clearly that price already took it. And the next order block now that we would have been looking at, because why? Okay, what then happened? This is an internal structure. We had this. So price pullback, came back in here, broke the structure here. But then we had this internal structure, internal BOS. So within a BOS, there's always extra BOS within if you go even lower time frame. We have this internal structure, internal BOS. And then within this internal one, so now look at again from here. If I should pick my structure again and I draw, okay, from here now, broke this structure, upside, pull back, look at, up here, broke this structure, pull back, created a new high, all this way. And then we have this, right? We have this structure here. And then we have this BOS here. And then from here now, I can now define this as my new order block. So the BOS you saw that I draw, right? That you see that is above, that is not beneath, is because I have internal structure within it. So this BOS you see that I draw, you see the BOS I draw, if you see now, if you see from the 5 minutes I draw this, right? So this is an internal structure because I have internal structure. This structure, this BOS that is beneath it has been mitigated already. Price might not even come to it again. So do you understand, Leader George? Can you hear me, Leader George?
Yes.
So for we to draw, so we don't just draw all this other block, fair value gap and stuff like that. We also have to check if they are not mitigated or not. Because once they are mitigated, price might not likely come back to the other block. But just know that when there's an unmitigated order block, unmitigated in the sense that price hasn't come to that block to take order, it will eventually come. It might take even orders above it. You understand? It will leave all those blocks, but then if it's not mitigated, price will definitely come back to it. So you can see now, we are expecting price to take out this liquidity to come here. And then if I was to look, if I was really, if I wanted to just wait for a really perfect price. I won't take the price from here. I'll take it from this internal one. This will be my POI, point of interest. Like I will say, perfectly, I want to really like execute in a discounted area. I will be taking it here. I won't be taking it out here. So high possibility that price will come here. Why do we mark out other block like this that would only go like just a straight line to say, okay, I can just take the price from here? Because we know that price might come to this area, right? And still go within this area. So if it's still within this other block, I know that I'm still good. And my stop loss area is covering below the swing line, because I know that price might play around here. Okay. And at times it doesn't hold, it still comes back to tap other block beneath. You have to look within structure and structure, you understand? Because why price might resist just the external structure and not come to the internal one. It might actually be that it's going to fulfill the internal ones. So I hope I was able to answer your question. If we have any other question in the chat, I would have been gladly to take the questions. But since we don't have any question, I think we should be wrapping the class up. And I will be remind everybody that our class is always by 8:30 p.m. Nigerian time. Don't miss any of the classes. Always show up. And whenever you are coming to the classes, always take notes and make sure to do your research, and then take your time to practice whatever things that we do here, so as to be able to always make successful trades and be able to take trades by yourself. So we'll be calling it a night. Thanks for everybody that showed up. We're expecting you in our other classes during the week. And I'm wishing you all a profitable week ahead. Thanks everybody for showing up. If you have any other leaders that have to say anything, please, you can just say briefly before we call it a day. Thank you, leader Florence. If not, we'll call it a day. Thank you, guys.